Hey there, this is Alex Kluge. I'm here from Toronto Home Experts, and I'm here to dive into the March 2022 Toronto real estate market update. Okay, there's been much that's been discussed, I would say, in mainstream media and also social media about what's happening in the Toronto real estate market. Actually, what I think is happening is there's a little bit of a dichotomy when it comes to the real estate markets in the GTA. And I'll dive into some of these numbers a little bit more closely as we go through the video here. But basically, what I'm seeing is, there is a little bit of a slight, moderate price decline, I should say, from where we were in February, 2.6%, which is really not a big deal, especially when we're up 12.5% from December alone. Really, we've seen perhaps a slight peak in February. And what happens is every spring market, there's a peak month in terms of prices. So if you look at the first half of the year, most of the time, that's in May. Sometimes we'll see it in April. In other years, we'll see it in June. But I would say I think the number is something like 75% of the average sale price peaks in the month of May. And what I think may have happened this year, it's too early to tell, but maybe we would have seen that peak in February. And so what usually happens is, you've got a little bit of a run up in price, then you have like a plateau, and it basically stays steady. And then typically what happens, we'll see another price incline come in the fall, and that's basically what we saw last year. We saw like a nice moderate increase through May, and then we had that peak, and then we saw maybe a slight decline in average price, and then we saw another leg up in the fall. So I think with the fact that we have rising interest rates right now, I think there's a strong likelihood that's the case, that we'll see that little bit of a plateau over the next 4 or 5 months. Now, do I see a crash happening? I mean, that's a question that I've been getting from time to time, and no, I do not see that happening. I mean, it is still a seller's market, and we're going to look at some of those numbers really in depth in this chat, but you'll see it's still a seller's market. But micro markets within the GTA are behaving very differently. So anyways, I'll dive into that in a few moments. So first, let's talk about sales volume. So when we're looking at March 2021 to March 2022, we saw a 30% decline in sales volume. So on its own, it's not a great stat to look at, but you have to remember where we were March 21 versus March 20 is that March 2022 is what I meant to say. March 2022, what I noticed certainly is that we had March break, as we all know, in the middle of March. And typically, what happens is, especially when it comes to freehold properties, there's a little bit of a pause that week, just because of school breaks. Families are maybe taking holidays. And this year, what I noticed is that certainly families were taking a lot more holidays this March break than the previous March break, 2021. And that's because a lot of the travel restrictions have been lifted. Vaccine requirements in other countries and testing requirements and all that has changed. So what I noticed is certainly there was an increase in travel from families during that month. So what I think that's done is that's put a little bit of a skew on the volume. But even if you take that 1 week out, it's still a decline in sales volume. But really what we're seeing, actually, the sales volume in the 416 fairly consistent. We saw a pretty significant drop in the 905, like specifically in Durham region and York region, which I think is really leading the pack in terms of perhaps a slowdown in those markets, so to speak. Okay, when we look at active listings, we're comparing active listings from last March to this March, and we're down like 4%. So when you're looking at like sales to active listings, like it's a pretty wide spread in terms of where we are. So we look at this year with that gap, it would suggest that we would see an average price decline, which we have, and you'll see that in the next couple slides. So we're not seeing the floor fall out from under us. Like certainly that's not what's happening. What I'm seeing personally in the market right now is that the good properties are selling, and the what I call the B minus, C plus properties are not. So that's skewing the numbers a little bit. If you've got a very well presented property, photographed well, marketed correctly, staged fully, and capturing buyers' attention, those properties are selling. Those that perhaps do not choose to do those marketing strategies are noticing are sitting on the market and selling eventually, but at a lower price compared to their peers. So, but that's just anecdotally from what I'm seeing in the markets that we operate in. So new listings, if you can see, are down roughly 11% from where we were last March. And last March was, I would say, like a very unusually active month for the month of March. So we can't take that too much of a benchmark. So it does skew the numbers a little bit. But, this just goes to show that, the number of new listings is declining. And I do think that is in part and parcel due to the fact that we had March break this year, and really, that I think played a role with sellers choosing to perhaps not list over that week and taking that pause and skewing the numbers a little bit, which would make a lot of sense. So average price, I want to get into this a little bit. Now we're talking about the average price from last year, and there's a pretty big increase, which is 18.5%. But what I find more interesting, and I touched on this on the top, is that we only saw like a 2.6% decline from last month. So, what are we expecting moving forward? I guess it really depends on a few things. Like, are we expecting a rapid rise in interest rates? That would certainly slow down price acceleration, no question. But what we're seeing now is fixed mortgage rates are just under 4%. I think I saw Scotia at 389, TD at 399. So they're just under that 4% range. And just for some context, in early February, those rates were 2.65. That's a pretty big jump in just under 2 months. So of course, when you see that kind of increase in mortgage interest rates, it's going to have a natural dampening effect on prices. So I guess the question now is, we've seen bond yields rise, which obviously affects the fixed rate mortgages, but now there's going to be a focus on the variable rate mortgages and what happens with those, with the Bank of Canada announcements next week and leading up to the summer months. So when we're looking at this, really we're still up fairly considerably, just over 12%, as I mentioned, from December. So really, this average price may be a plateau, like I mentioned. But I think what we really want to monitor is what happens in the next 2 months. Like that'll be really, really telling in terms of what to expect for the rest of the year. Like usually the spring dictates the market, and I'm curious to see where we see sales volume going into next month, as well as average prices for the GTA. Now, the home price index, as you know, this is a really good metric that the Toronto Real Estate Board uses to determine the average price benchmarks in our major areas. But what I've seen, and this is year-over-year changes. Like these numbers are eye-popping. Like look at Durham region, look at York region, even Peel, like almost 40% for Peel, York, and Durham region's up from last year 42%. I mean, those are not sustainable long-term numbers. So what we're seeing is there's a slowdown in Durham naturally. Like if prices are up 42.5% from last year, the average price from February till March was down 6.5%. So it doesn't surprise me in the least bit that we're seeing that because of such a huge run up in price. And furthermore, York region was the second slowest or biggest decline, second biggest decline in average prices month over month from last month to this month at 3.5%. So like again, we saw such a huge run up last year, and I just think we're at a plateau that's really what a lot of technical traders like to say the consolidation period, like in terms of pricing. I think that's where we are right now. I'll be really interested to see how rates play a role. Like the higher interest rates do increase, that obviously it eats into um, buyers' affordability, and that'll play a role into the type of assets that are purchased, whether that's freehold, semi, townhouse, or condo. What is actually interesting is the condo market, especially downtown Toronto, is extremely active, and that's what I honestly thought would be this year. This year would be the year of the condo. If anyone watched my market prediction video from January, we'll see that I was really talking about the condo market playing a huge role in leading the 416, and that's exactly what's been going on so far year to date. So when we talk about the percentage change in asset class, like we look at semis, detached, townhouses, and condos, really like this is an indication of what's happening year over year. What'll be more, I think, telling is the next sort of 3 to 6 months once we sort of get to the end of summer to see where those benchmarks are relative to where we are today, because that'll be an indication. And I do think, as I mentioned, I think the 416 is Toronto proper, the real estate market lagged last year relative to the rest of the Toronto Real Estate Board. And I think this year is going to lead the Toronto Real Estate Board relative to average price changes relative to, Durham Region, Halton, York, and Peel. So now we're talking about days on market. Days on market is, again, one metric to see and tell us like what are we seeing with the speed of which properties are selling, and is a tool to see whether or not we're still in a seller's market. And 8 days on market for the average is extremely low. And yes, it is a seller's market by that metric. And we look at some of the other metrics that we're looking at in terms of sales to new listings ratio, and months of inventory. But again, it's just one metric. It's not the metric that kind of describes everything that's happening right now. But certainly an average of 8 days is like fairly close to all-time lows. So again, this just measures the properties that are selling. And so if you have a terminated listing, suspended listing, that does not factor into the average days on market because the property needs to sell. So that's something just to bear in mind when looking at those stats. Again, months of inventory, 0.9%. We're up slightly higher from where we were last month. Again, no surprise given some of the metrics and stats that we're looking at today. Again, this is anything less than like 1.5 is still considered a seller's market. So despite what you're reading in mainstream media and social media and so forth, this is a very positive indication that we're still a very healthy real estate market. And I don't think, as I mentioned earlier, that we're going to see a coming crash this year. Certainly, I think we're going to see, perhaps like a leveling off in terms of prices. And maybe towards the end of the year, once rates have stabilized and we're seeing some positive indicators on our Canadian economy, that we'll see some further price increases later on this year. So that wraps up our video for this month. I do appreciate all the amazing comments and feedback that we've been getting from all our subscribers and clients, and just people watching on YouTube. And I'm glad people are finding this information helpful. If you do want to know how these market stats affect you as a real estate homeowner or prospective homeowner or real estate investor, we're happy to talk to you one-on-one and give you some guidance, and so you understand how the real estate market is affecting you and again in today's market and also moving forward for this year. So anyways, thanks again for watching our video this month, and we look forward to seeing you again next month. All the best. Thanks again.